Hi, I'm Sam Meredith, and joining me today to discuss the French economy is Eric Vanraes, Fixed Income Portfolio Manager at EI Sturdza Investment Funds. So Eric, France's National Statistic Institute, INSEE, have projected that the economy will grow by 1.2% this year, marking a significant acceleration, which follows on from an average growth of just 0.4% over the past 3 years. Do you share this optimism, and how sustainable would growth of this nature be for France?
Yes, on the short term I share this view, but on the long term it will be more difficult. Of course, yes, there is a significant acceleration currently because of four major events, what the French call the four magic planets. The decrease of the euro against the dollar, the drop of oil prices, low yields, low government bond yields, and obviously the QE implemented by the ECB in March. But these four magic planets are less magic than in March, for example, because the euro, everybody was trying to see the euro at parity with the dollar, and now it's at 112.50 or more or less. So it's better than 140, 145 1 year ago, but it's not one. The oil prices were at $40 a barrel, now it's around 60. So it's not so fantastic. It's not as bright as before on the short term. On the long term, there is this significant acceleration is only temporary, in my opinion. My big question is growth on the long term is driven by reforms. And in France, unfortunately, reforms are not implemented by the government, and what we call macronomics is not enough. And I'm afraid that one of the drawbacks of the QE is that it's a bonus given to lazy governments, and France needs urgently structural reforms, and the QE and the four planets give room to the current government to postpone reforms, because obviously there are elections in less than 2 years now, and it's very difficult for governments to announce painful reforms to the French population. And that's why I think that long-term growth is very difficult to say that long-term growth in France will pick up significantly.
French business confidence dipped slightly to 100, yet perhaps more significantly, flash market manufacturing PMI data has shown an increase to 50.5 in June. How is this reflective of the current state of economic health?
Importantly, manufacturing confidence was published this morning at 100 against 103. So the market manufacturing PMI was good news, because 50.5 is good against 49.4 last month and 49.6 expected. It's above 50, so it's good news. And the PMI in services is improving dramatically, 54.1 against 52.8. So it's good news. But as I said before, I'm afraid it's only a short-term improvement, and we need to see what will be the business confidence and the manufacturing PMI in the future.
Lastly for today, with an announcement looming from the emergency summit as EU leaders attempt to break the deadlock of the Greek debt crisis, which other indicators should we be looking out for?
On the short term, I think that unfortunately for France, the first data that must be seen is the number of job seekers in France, which is currently above 3.5 million. Because if growth doesn't mean that the unemployment rate does not decrease, it's problematic. Secondly, consumer confidence is key. And consumer confidence is currently at 93, so it needs to improve, because it is key, because consumer confidence obviously is a main driver of consumer domestic consumption, and domestic consumption is still 55% of GDP. So it's a big weight. It's a huge weight in the composition of the GDP. So to summarize, unemployment rate, consumer confidence, and inflation, I think these three key elements will be very important to analyze in our homework in order to assess the improvements of the French economy.
Thank you for joining us, Eric. Be sure to check back with Dukascopy for more updates throughout the week. Goodbye for now.